In the metals quadrant today, taking a look at the May copper futures contract, hitting a low of 4.0665. That was down 1.75%. And a strong rebound, an impressive rebound in its scope throughout the rest of the day. Took us to down about 13 basis points on the close, but you can almost call that unchanged considering how impressive that rebound was. We did have a high that was above yesterday's settlement, 18 basis points, 4.1465 was that high. But again, we finished negative change on the day, but it was just so strong that I'm going to go ahead and call it unchanged. Now, it was very good data throughout the morning and the evening last night that actually helped copper make that rebound. And it was actually data that was very good for industrial metals. For example, German inflation data came in as expected, so that was a decent sign. But UK GDP was stronger than expected. Canada's employment figures were stronger than expected. And U.S. Michigan consumer confidence was much stronger than expected. All of those relate directly to industrial metals, and copper benefited from that coming off the lows. Now, when you look at what benefits copper the most, it's good data out of China. China's been very quiet in terms of economic data lately, with the Chinese New Year first, and then the National People's Congress that went on during last week. This coming week, a big batch of Chinese data is expected out of the economic sector, specifically China's tertiary index for January, also its housing price index, and the January to February industrial production, retail sales, and employment figures. All of those coming out next week. So they will likely have a direct effect on copper prices. We saw some of the international data affect yields overnight and into the morning on Friday, and that affected copper prices as well with that reflation trade. It would be silly to think this Chinese data won't affect copper, since China, as always, we mention it all the time, biggest user and smelter and consumer of the industrial metal.